Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at General Electric. Okay, we're going to take a look at ticker symbol GE. They reported earnings on Friday. They were up 4%, up as high as 5%. Some people are super stoked. Others are not thinking that the company's so hot right now. I'm going to look at it from a technical perspective here in just a second and just show you what the charts are saying or what the technical setup is. Okay, so first up, as you can see here, a lot of analysts are saying that they're not thinking that this is turnaround time yet. We've got analysts here that are that have a $12 price target. Second lowest to JP Morgan. They have Cohen maintained its $12 price target. You've got the JP Morgan with an $11 target, and then you even have people that have high targets like CFRA slash their target to 16, which is $2 below previously. So the bottom line is that the GE is not looking so rosy. As you can see here, the street is feeling the same way. As you can see here, they're saying it's still too opaque. The company's still too poorly managed, and they still have too many problems to turn it around at the present time. And so as you look here, they do have problems with their engine, the Southwest engine that went out. Unfortunately, there was that horrible plane crash, and it was a GE engine, and so there is the possibility that there could be recalls coming. This is a very common engine that was on the plane, the Southwest plane that crashed, and there's over 6,700 aircraft around the globe that use these engines. So if there was a recall, that would be another major expense. Keep in mind they do have a 1.5 billion set aside for paying. They're under an investigation with the SEC, and so they're setting aside capital to possibly pay a big fine. As you can see here, they actually knocked another 1.1 billion off their fiscal year 2017 operating profit. This is an interesting article. I recommend reading this, but it's showing that actually the numbers are much lower than what people are thinking. So I recommend reading this. There's a nice table. This is a well done article. Another one here is just showing here about some more insight into GE, and so I recommend reading this one as well. And so yeah, if you're thinking about taking a position either way, long or short, here's some articles to take a look at. And now from a technical perspective, let's look at the daily chart. So this is the GE daily chart, closed up nearly 4%. So now you have RSI at 61, so it's in the bull zone. It still has room to run until that 70 overbought level. Check out how this is the highest level for RSI in quite some time. It hasn't hit these levels in many months. As you can see here on Fastow, it did cross over the red line. Okay, so the black line crossed the red line to the downside. You can see this crossover, and it did drop back below 80. From a technical perspective, that is a technical sell signal. When you have a Fastow above 80 and then it drops below and breaks that red line, it is a technical red flag. Some people use that as a sell signal. Now it'll have to stay below 80 now. If it ticks back up and it breaks back above the red line, then it could stay in the power zone. If 80 on Fastow turns into resistance, you could see it retrace, similar to over here, as you could see back here in March when it got above 80. Notice how it broke down once it broke back below that red line. Okay, and that signaled the start of this downtrend over here. Okay, after a nice bullish run. Okay, and so now another thing to look at here is ADX with plus DI and minus DI. ADX is looking really bullish right now. You've got ADX line, the black line, crossing over the red line, minus DI to the upside, and you have a nice uptick on plus DI. So this is a really a strong move by the bulls. You can see they're breaking out here. This is the highest level for plus DI in quite some time, and so this is a strong signal that the bulls are really have been taking control. If we look down here at the candles, there was a new uptrend that started back here on the what is this? On the 13th, when there was a close above the dotted purple line, and so that close above the middle Bollinger Band at 1337 signaled the start of a new uptrend. Notice there was a gap in between high of day on this candle, okay, and low of day on this candle, and then notice what happened with this candle right here, this red wick right here came down and it filled the gap. So it instantly came down, filled the gap. Okay, that's important because we have GE here filling gaps, and so you notice that this gap up here filled. Okay, so there's another gap that filled. There was a gap down. Okay, so over here there was this run in March, and then there was a gap down. So there was a space between low of day on this candle and high of day on this candle. And on Friday that gap filled. So that's a filled gap. Filling a gap is a climax event. Okay, so you know that turns into a key resistance level. We'll go over that in just a second. But I want to go back over the here. I didn't want to erase those ones. But yeah, I want to go back over let's see here. Okay, so we have the gap. Okay, so we have a gap now between high of day on Thursday and low of day on Friday. Okay, so now there's an unfilled space between these two candles. Okay, and so what we're looking at now is a GE has a nice uptrend going. It closed above the middle Bollinger Band. It was able to turn that level into support, and it's been heading higher. It's been riding EMA 4 support higher. It's in a very strong uptrend. The red flag was the gap up open. It was a bullish move above this green line. That's the 50-day simple moving average, and that is our target on a pullback. Okay, so I am looking for a pullback to this $14 level and that 50-day simple moving average to be tested. I think the chart is set up for that. Now I could be wrong, but when you have an uptrend going and there's a gap up open above the upper Bollinger Band, okay, that's down here at 1418. That's the solid purple line. Many times the candles will work their way back into the bands. Okay, what it needs to do to head higher is it has to break above this key resistance level. Okay, so from back here, okay, where it had this gap fill, and then you have the high close here on this candle right here is the key level to break. It needs to get above the closing price on the 12th. It came up and it hit that level and it pulled back. That's the top of this current range. You know, you could even bring it up to this level right here. You know, in between this white candle and this white candle here on the 6th, that's the top of this current range. If it can break above both of those levels, and that's very possible, and that could happen, and I could totally be wrong, and it could bust above 15, and then if that happens, the big level to break is going to be, you know, the next target would be the 100-day simple moving average at 1559. That's the target to the upside. It would have been better on Friday if it was able to push back above and then get above 15, and that would be a signal that 100-day simple moving average is on deck. The black candle forming is a signal that the bears were actually in control. Now the bulls did drive it off of low of day. I grant you that, but it did close below the open. A black candle forms when a stock is up on the day but closes below the open. The open was up here and the close was down here, so they drove it down. You know, when you have a giant volume bar like that after a big run, you want to see a white candle and pushing higher. Instead, it filled a gap, so it committed it completed this it had a climax event, because the top of the gap is always a key level to break. And notice how it opened right at the top of the gap level, and then it broke above briefly, and then it pulled back below. And so going forward, above 15 will signal more upside potential, and then it has to break above this closing price, and then you're looking for a run up to the 100-day simple moving average at 1559. Now, if it fails to break above this 1475 level, the bottom of the gap, that's going to be a red flag. And then if it drops below low of day today, which was down here at let's see, low of day was 1434, that's going to put the bottom of the gap on deck. And notice how the bottom of the current gap is lined up right there at EMA 4 at 1405 and the 50-day simple moving average at 14. Now the candles could work their way back into the bands, hit the 50-day simple moving average, bounce off that level, and then proceed to go back up and hit that $15 level. I could fully, see something like that happening. That seems like a logical type of move if the chart's going to remain bullish. It was a very strong move above that 50-day simple moving average. I just don't know if it's going to be able to just now launch from here and start pushing higher without coming back and testing that 50-day simple moving average. Is it just going to run now higher, break through 15, get above the 100-day simple moving average, and head up to 20 like some people are saying right now on StockTwits, without coming back and testing the 50-day simple moving average? it hasn't even been tested. Not one time has it come. No candles have tested that yet. And so, from from technical analysis theory, would be that it would have to come down, test that level, and then if it was bullish, like a lot of people are thinking, then it would bounce off that level and head higher. Now, if it came down there and it hit that 50-day simple moving average and 14 failed to hold, that would be a red flag. And then the bears that are talking about 13s on deck would get a run down here to that middle Bollinger Band, and it retested at 1333. So that 14 level, if it holds, would be a reload level in the pullback. But if support broke, then you'd want to head to the sidelines, wait for that bounce off at 1337. Bottom line is, if you're more of a long-term investor in GE, you have a good uptrend going. You shouldn't be concerned about the short-term movements in the stock. As long as this daily chart is forming candles above the middle Bollinger Band down here at 1337, then your uptrend is intact. If you look back here in March, it got above the middle Bollinger Band, and that level failed to hold, and the downtrend continued. As long as the candles are staying above the middle Bollinger Band and above this 50-day simple moving average, you have a nice, healthy, strong chart. It just got a little bit ahead of itself with this candle floating well above the upper Bollinger Band. Our strategy, whenever this black candle pattern forms during an uptrend with a gap up open above the upper Bollinger Band, the signal for us is to either lock in gains, avoid the stock if you're thinking about entering, or you could take a short position on trying to play that gap fill for the pullback, or buy puts. Okay, if you look here at GE daily chart, at a longer term chart, let's look what happened when black candles have formed in the past after a gap up open. You can see back here on this January run, it was able to, it formed a black candle down here on the second day of January after a gap up open, and it proceeded to head higher. It had a black candle. It's similar to this setup here. You could see this candle, this black candle above the green line. It pulled back, and notice how it tested that 50-day simple moving average, and then it launched off of that. Usually you're going to get a test. It would be rare for it to be able to break above the 50-day simple moving average without testing and heading higher. Now, it failed to stay above the 15-day simple moving average, drop below, and then the downtrend continued. Okay, I know this chart's hard to see, but if you look over here, okay, it got above the 50-day simple moving average in September and October. And notice that each time it got above, it pulled back and tested that level that failed to hold, and it pulled back. But each time it was tested. Okay, and then now look over here in June. This is kind of a similar setup to what's going on right now. You can see that the candles, in a way, I mean, this didn't have a good uptrend going yet, where it does have a good uptrend going right now. But there was a gap up open back here on the first of back here in June, the second week of June, above that green line. And notice how the red candle pulled back to below that 50-day simple moving average. It went back up and pulled back and tested the 50-day simple moving average again. The 50-day simple moving average got tested, and then support ended up breaking, and the downtrend continued. And so the black candles, you can say that this black. Notice that this black candle right here. Okay, so you have an uptrend, a gap up open with the black candle, and then a red candle followed. So besides this black candle right here with the white candle that followed, black candles on this chart are being followed by red candles. Look at all the black candles on here. Each one is followed by a downward move. Okay, and so you can look at all these black candles. So the odds are, in my opinion, that history repeats, and that it pulls back and tests that 50-day simple moving average. It could bounce off like it did here and launch back up. It could get back above, but it has to turn the 50-day simple moving average into support to get a new upturn going. Now, if you're a bull, then what you're looking for is a break above this 100-day simple moving average, and that would be a huge change in trend. Notice how since back here. You have to go off this chart to see all these candles on this chart are below the 100-day simple moving average. So that would be a huge move if you could turn that level into support. Then you would have a real reversal. The big thing is, look at the volume. So you have this giant volume spike here, but you do have the black candle. So you didn't have the big uptick that you would think. If you look here on accumulation distribution, you could see that there was a just real quick, I'll show you. You've got, so you notice how accumulation distribution, look how it ticked down. Okay, you have a giant volume bar, 18 million shares. I mean, this was the largest green volume bar in years. Okay, all these other volume bars on this chart are red. Okay, the big red volume bars that are this size are red, and downtrends followed. And even if you look at this large green volume bar here, a red candle followed and it pulled back sharply. And so look at this big green volume bar. What happened the next day? That was on a black candle. A red candle formed, and and a red volume bar. And so the odds are that this is gonna, this is gonna take a breather. That would be the historical trend. Okay, and so you have this giant volume spike, one of the largest volume days in years, on a big up day. But you have a downtick in accumulation distribution. Look how small shaken money flow is. You can't even see the bar. It was a wash. There was no heavy accumulation. This is telling you that people were not loading, right? The people did not. You would expect a big spike. You would expect a green histogram spike. Like, look right here. Okay, so you have, see this green histogram spike? That was when the giant green volume bar happened, just like this green volume bar here. But there was no spike, so that's another red flag. That's bearish divergence. Okay, if you look here at the GE weekly chart, okay, you can see here that this kind of smooths out the data on that daily chart that I just showed you, and you can see how it's been in this very long multi-month downtrend. Okay, and so what's going on now is it did close above EMAs 4 and 8 last week, and those are the levels that it needs to hold. It needs to stay above that pink line, EMA 4 at 1391. If it can stay above that level, it remains in play for a bounce. Right now, this is a dead cat bounce. Look at this. This is the bottom. It's bouncing off the 13, the bottom of the chart. It's a dead cat bounce. Right now, all you have going for you is a short cover rally. Now, it could get a new uptrend going if it can break above EMA 13. That's the big level. It failed to close above that level at 1467. That's the orange line there. It failed to close above that. If it would have closed above, that would have been much more bullish. Now next week, keep an eye on it, and it very well could. And if it closes above EMA 13, that's going to be the bull signal, and then you'd be looking for a run up here to the middle Bollinger Band at 1547. Now this will turn into a new uptrend and will no longer be just a short cover rally if this middle Bollinger Band, the 20-week moving average, turns into support. So what happens is there has to be a close above that level. And look at this chart here. I mean, you have to go way back here into January for the last time there was a close above the middle Bollinger Band on the weekly chart. All right, January of 2017. All right, so you have to go way, way back. All right, it's been a long time. You have to go way back here into November of 2016. The last time there was a nice uptrend going on the weekly chart. So this has a lot of work to do. Notice how the orange line was resistance on the January bounce. Notice how it failed to get above that. It had a multi-week run. Notice how there's a multi-week run here, and then it hit that orange line and pulled back. Notice the September run. Okay, from 2017, same thing. Got above EMAs 4 and 8, hit that orange line and pulled back. All right. Now it did get above that level back here in June of 2017, and it closed right at the middle Bollinger Band, but they didn't let it stay above, and it pulled back. And so right now, it's all about turning the EMA 13 at 1467 into support. If you see that turn into resistance, that would be a red flag. And then if you saw it drop below 14 and go below 1390, that's going to be a major red flag. You could see 13 back on deck. Now if it can break above 15, look for that 1550 level. And if you see a weekly close above 1550, then the bulls have something to be excited about. That's when you could be like, yes, this is getting ready to go. Notice the PSAR bull flips. Notice that the green dots did flip below the candles. So that is the first PSAR bull flip since back here. But notice that PSAR bull flip was a head fake. It didn't result into a new uptrend, and it pulled back. And the same thing for the PSAR bull flip before that. There was a flip. The green dots were above the candles. They flipped below, signaling a possible start of a new uptrend, but it didn't happen, and they pulled back. And the same thing on this one. There was a PSAR bull flip, didn't happen, and it pulled back. So the last 3 times there was a PSAR bull flip, it was a head fake. Is this going to be the 4th time in a row, or is this going to be a bullish change in trend? Okay, so that's the big question going into this week. Okay, so our strategy is to anticipate history repeating, but keep an eye out for a change in trend. Okay, if you look here at the GE 15-minute chart, you can see that black candle at the start of the day. All the magic happened up here. This is, everybody, unloaded at the open. Notice the big volume. Okay, so you have the giant volume spike. You have the black candle with the spinning top and, almost spinning top. It might not be twice as long, that upper wick, but it's the same type of indecision candle. And then you had the red candle that followed with the candles working back back into the bands. Notice how the share price never got back up to that opening price level. That's the bottom of this black candle. Okay, so it has to get above that level, break that 1490 resistance zone to get a new uptrend going. Now the top intraday top turned out to be this 1470 level. Notice how it came down, bounced right off the middle Bollinger Band like a champ, held that, came up, hit that 1470 level and pulled back, and then notice how it bounced again off that middle Bollinger Band. That's the dotted purple line. It kept holding that level all the way into the close, and then the last candle of the day, it finally broke. The close was the first close below the middle Bollinger Band the entire day, okay? And so for GE to be bullish, it has to be forming candles above that level. That's currently at 1457. So going forward on Monday, above 1457 would be bullish, and I do think that was the after hours close. So it closed right on the what we call the 50-yard line. The middle Bollinger Band is on the 50-yard line because candles forming above signal possible signal uptrend, upside potential, and candles forming below signal downtrend, downside risk. And so right now, if that 1457 level turns into resistance, then you could see it drop down and test the support level at 1435. If that broke, then the 50 simple moving average at 1422 would be on deck. And then check out the descending resistance line. It's lining up right down here with the 100 simple moving average at 14 and the bottom of the gap target at 1406. So we have the so basically if that's the downward target is this 14 level, a break below the 50 and then down to the 100 simple moving average. Notice the giant volume spike here on the close. That was huge volume on the close. Nearly 19 million shares went through, and it closed down. Now were they pulling it back into the close to load up for the big run next week, or were they everybody unloading before the pullback on Monday? That remains to be seen. We just have to see what happens. Are the bulls going to be behind this and get it pushing higher and take it above 15 to that 1550 level, or are the bears going to be able to drive it down to 14 and test that 50-day simple moving average on the daily chart? It's going to be all about that 1457 level. It closed right on that at the the close in after hours. So above that level signals upside, below that level signals downside risk. If you notice, it was in this has this downward channel going. It hit that the top of the channel. It's been failing to break. It needs to break this red descending resistance line. And so once again, it's just all about getting above 1460 and 1470. Above 1470, that would be a big signal that the bulls are strong. And then for sure, if it got up to 15, that would be super bullish. Below 1450, that would be your clue. Yeah, it's really breaking down. And then if you look at the GE, this is the options chain here, okay? And so you can see it closed at 1454 regular during the regular session. And so here are the calls. Here are the puts. Pick your poison. The puts are got pretty cheap. They were down considerably, and the calls are all all the options are under mostly under $1 for this. So the options are cheap both directions. Pick your poison, and we'll see what happens on Monday. Thanks for viewing.